My mission is simple, to make you money. I'm here to level the playing field for all investors. There's always a bull market somewhere, and I promise to help you find it. Mad Money starts now. Hey, I'm Cramer. Welcome to Mad Money. Welcome to Cramerica. Other people want to make friends? I'm just trying to help you make some money. My job is not just to entertain, but to educate and teach you, so call me at 1-800-743-CNBC or tweet me at Jim Cramer. When you see the market flying in the face of endless negative articles about inflation, about the Fed, Ukraine, prospective earnings shortfalls, the Dow gaining 754 points, the S&P surging 2.76%, and the Nasdaq pulverizing 3.11%, do you think the buyers haven't heard the bad news? You think they're in the dark about inflation or the Fed's rate hikes, the war in Ukraine? I feel like anyone who's paying attention got used to those stories months ago. In the same way Netflix could rally off a number tonight that we would have considered awful just 6 months ago. Yet every time I come out with just a little wee bit of optimism, I find myself roundly criticized for ignoring all sorts of obvious negatives that will cause the market to crash any day now. We're told the Federal Reserve waited too long to tighten. And now, of course, inflation, unstoppable. We're told the president's too weak to stop Russia. We're told China will drag down the whole global economy with its endless lockdowns. I don't even dispute that stuff. But there's only so much the market can go down on the same stories. At the end of the day, none of these worries to me are systemic, like the financial crisis was, and none of them are new. It reminds me of when I used to scream at reporters when I started TheStreet.com 25 years ago to stop serving the same warmed-over negativity because it just wasn't helping anyone. Now, as I strolled through the canyons of Wall Street yesterday, deep in thought about how the market rolled over in the middle of our first show in the New York Stock Exchange on one story, the possibility, not definite, that Apple might be cutting back on hiring, I found myself thinking about other times when the market rolled over only to rally a few days later when I worked downtown in the old days. How about April 26, 1986? You remember that one? That was when nuclear reactor number 4 at Chernobyl blew itself to Kingdom Come. Oh, we were all paralyzed right down the block at the old Goldman headquarters, 85 Broad. We talked about selling all sorts of stocks because of the radioactive cloud that had killed hundreds, maybe thousands, according to the incredibly inaccurate New York Post. Some wanted to sell the stock of McDonald's, as we figured the European restaurants would be closed for a long time. Others urged me to find a play on milk, which would be destroyed by wind-blown isotopes. Finally, there were people who just wanted to sell everything because the market would certainly crash once we realized how bad the disaster was. But you know what? If you go back and look at the 40-year chart of the S&P 500, I defy you to even find the Chernobyl sell-off. You had to. How about the nuclear fallout? Because it never got here. Frankly, it did get to Sweden. Fast forward to the crash of 1987, a year and a half later. Well, now we're starting to talk about something you think would be bad, right? I mean, I had the good fortune of being totally in cash for that incredible financial meltdown, October 19th, Black Monday, a crushing 22.6% decline. One day, hedge funds closed, brokers shut, billions lost, end of the world. Except it wasn't. In fact, most people don't even remember why we crashed. It was something, it was about like a strong dollar ruining world trade. Oh, hey, watch out, we got that now. Within a year, we made back all of our losses and then some. Black Monday and the day after were actually tremendous buying opportunities. Now, my critics back then would still be parked in 40-year CDs. Yeah, that's exactly where they would buy them. All right, I'll get the hang of this thing. There we go. How about Friday the 13th of October, 1989? Oh, Friday the 13th, that alone is terrible, right? A legendary mini crash, 1989. A collapse of 6.9% in a couple of blinks of an eye. Why did that happen? Oh, so serious. Such a terrible thing. A failed leveraged buyout of none other than United Airlines. Why the heck did that even matter? In retrospect, it obviously didn't. What did you have to do? You couldn't even wait. You should have bought it in the before market trading. of that very Monday morning. Now, all of these things occurred when I was working downtown on Wall Street in the 80s. And I can only imagine how I would have been eaten alive on social media. If it existed back then, I can just see the scathing, dripping cynicism about how crazy anyone would have to be to recommend stocks while nuclear fallout looms. A literal cloud of death coming our way over the Atlantic. How could I think anything positive after Black Monday? How about a failed LBO? Heavens to Betsy. But with the hindsight, the benefit of hindsight, my biggest mistake in each case was that I wasn't bullish enough. Especially after the crash of 87. I stayed in cash way too long. I figured there had to be more to it, right? The market couldn't possibly go down 22% with no reason. Wrong. It went down 22% with no reason. And that's why we came back with such a vengeance. These are just tales of the 80s, when I worked down the block from here. Forget the horrors of the last 20 S&P downgrade of U.S. debt, September of 2011. Ooh, crushing. Remember the Cypress? The Cypress canary in the coal mine? Hey, how about the way everyone always says canary in the coal mine? What the heck is that about? Like we're in like some sort of mining business. Pending collapse of Monte Paschi, the oldest bank on earth during the European debt crisis. Hey, I got a checking account there, it's doing fine. Or a slew of domestic bank failures during the Great Recession. Can't help you there. When I was looking over my Twitter mentions last night, because I was just genuinely basking in the glow of this great place, you maybe get a shot up there. Look how cool it is. See, I got a handheld guy now. It's really cool. Cool outfit there. Amidst the genuinely kind of constructive comments, we had a lot of kind of constructive comments. I mean, well, there were so many snide, belligerent, moronic attacks that after a while, didn't get to me because I'm Philadelphian, but I read them. Here's like a typical one. Who the heck is Jim Cramer to recommend stocks in this market? We didn't have Twitter in the 80s, but I had plenty of critics back then when I wrote articles about the market. I don't know. It seems like yesterday was a good time to be bullish, at least after today. Yet some bozo said to me, honestly, guy wrote to me, he said, he wanted to know where my license was to talk about stocks. Like it was like a fishing license. Well, here it is. Yep, this time there's a whole group of critics online. People who'd rather be wrong and angry than right and lucrative. They see me as some kind of a stand-in for Wall Street or a stooge for late-stage capitalism, tool of the hedge fund elite. Like I even talk to those guys. But at the end of the day, I only represent myself. I'm trying to teach people how to approach markets using everything I've learned for more than 40 years in the business, including what I learned just down the block on a day when we were supposed to sell McDonald's because of Chernobyl. Yeah, that's my only agenda. And as a grizzled veteran, and I wasn't then, but I am now, I can tell you that the level of negativity about stocks at this moment is the highest it's been in years and years and years. Now, some of that's correct because the market's gotten real ugly at times. But it's also because there's a new class of investors who buy stocks not based on fundamentals, but based on anger. Like they're trying to win some sort of argument. That's the wrong approach. These people would rather stick to their guns than try to make money. And that never ends well. Many of the haters seem to like only a handful of stocks, mostly money-losing companies that went out of style months ago. Or they're sticking with crypto and all the crypto that went down. They don't understand that changing your mind is a virtue in this business. Of course, I'm here to teach everyone, including my most unconstructive critics. It's why I started the Investing Club. It's why I give you a 10:20 a.m. editorial meeting every morning for club members. I know that many people have lost their shirts because of this market, and I can't blame them for wanting to take it out on me. I'll do my best to put that shirt back on if you watch the 1020 show. It's gaining traction by the day, frankly. Now, I recognize there's no way to do this job without building up an ardent anti-fan base of highly motivated critics. There's always going to be an army of people eager to say anything Cramer tells you, take the other side of the trade. By the way, now you're on the other side of a plus 754 rally in the Dow. Good luck with that. But even if you think I'm an idiot or a fraud or a charlatan, make no mistake. If you want to bet against me in this market, you should understand what side I'm on. I'm on the side of progress. See, I bought stocks down the block when the Dow was at 1,000. I bought them down the block when it was at 2,000. I bought them down the block when it was at 3,000. I'm up the block, and it's 31,827. I think they're still worth buying. What makes me so confident? Simple. I know it's just a matter of time before the millions of people who started investing via, say, the brokers that were really just apps masquerading as brokerage houses will either be blown out or lose interest, like all the people who bailed yesterday when we learned about the Apple hiring slowdown, the ultimate dog bites man story. Once they capitulate, that's how a market bottoms. You know what? Maybe it's already happened. Maybe after today's pasting, they're all gone. But if I can do only one thing in this tough environment that makes a real difference, I hope I can separate the smart, younger investors from the charlatans and mountebanks who think the whole game, the whole market, is just about two stocks, GameStop and AMC. To the latter group, all I can say is go buy a video game. Go out to the movies, but shut the heck up. Here's the bottom line. I want you to make money, not lose money, even if you hate me. But for the majority of my haters, all I can say is it's not too late to take the other side of the trade, even after today's terrific run. Let's go to Susan in New York. Susan.
Hi, Jim. Congratulations on the new set.
Thank you, Susan. What's going on?
I'm a big fan. Always overwhelmed by the breadth of your knowledge. So I was wondering about a very old standard. Once upon a time, this was a cornerstone of every diversified portfolio. What are your thoughts about General Electric these days?
Okay, I think GE is a work in progress. I'm not that crazy about one of the divisions, which is an energy wind business. I think that a much better buy, frankly, if you want aerospace, is Honeywell, H-O-N, which my trust owns. Okay, look, I want you to make money, not lose money, no matter your opinion of me. Hey, on Mad Money tonight, Halbert reported a strong quarter this morning, sending the stock higher, but then it leveled off. I'm drilling off this. I got to find out what the heck happened here. I think it's a buy. Then the averages rebounded nicely today. So is this the runway the bulls have been waiting for? I'm going off the charts with someone who was really right about this rally. Yeah, we're going back to the well of Larry Williams. And IBM reported a top and bottom line beat for the first quarter, but the stock got crushed. Let's find out if that's what should have happened when we talk to the CEO. So stay with Cramer.
Don't miss a second of Mad Money. Follow @Jim Cramer on Twitter. Have a question? Tweet Cramer. #MadTweets. Send Jim an email to madmoney@cnbc.com or give us a call at 1-800-743-CNBC. Miss something? Head to madmoney.cnbc.com.